big story today, of course, is gold, because gold is rallying yet again to a fresh record high as a fresh bout of US dollar weakness. Criticism of the Federal Reserve by US President Donald Trump and President trade war concerns underpin safe haven demand. Bullion roared yet again to above $3,385 per ounce as the US currency fell to the lowest since early 2024. The precious metal has soared to successive records this year as the trade conflict has unsettled markets, hurting appetite for riskier assets. Central banks have also been adding the yellow metal to their reserves, aiding the robust demand for gold worldwide. Banks have become progressively more positive about gold's prospects as this year's rally has gone from strength to strength. In fact, Goldman Sachs continues to remain bullish on gold. They expect gold to hit $4,000 per ounce midway through next year. We also spoke to a whole host of experts on the impact of gold prices and what's the outlook as far as gold prices is concerned. Kishore Narne, head of commodity and currency at Motilal Oswal Financial Services, says that the yellow metal is seeing an up move on the back of global economic policy uncertainty. Listen into his rationale.
Threat of firing Fed chairman itself actually rocked the markets again. So until unless this continues, the gold will hold its ground and continue to move up. So what levels it can move up? It can go to 4,000, 4,500. It doesn't really, level is not an important thing. The direction is more or less going up. There could be corrections of around 200, 300, $400 also. Again, that doesn't really matter. So long-term trajectory is up. Short term, yes, there is a high amount of risk. It's a news-driven rally. It's a lot of noise in the markets. So the volatility will be slightly higher, and there could be anywhere possibly around $250, $300 corrections. That should be seen as a great opportunity to enter gold again for long term.
Even if the prices are at 1 lakh rupees, but they are steady and there is not wild fluctuations, consumers still come in. The manufacturers or retailers will modify their product portfolios for a lower caratage or maybe lower weight range jewelry, and the market will go on. But I think the lust for gold in India is unique, and it will continue. Exporters were in a shock when the 26% duty was levied from April 9th. Luckily, there is a reprieve now for 90 days. So government is also working overtime to probably get the trade deal done before that 90 days. But still, 10% is a large number when it comes to precious metals. So that is weighing it down. Our exporters are trying to, modify their product portfolios and probably push for a lower caratage or lower weight items to supply. But yes, there is some issue for next 2-3 months till this situation subsides. The exporters are going to have a tough time.
Gold continues to shine bright and brokerage houses continue to remain very bullish even after the recent run-up. And you just heard Motilal Oswal, commodity analyst, talk about his expectations, and he expects gold to touch $4,000 per ounce over the next 16 to 18 months. That's the word coming in. But